Mark, so let's start though with the big picture for the S&Ps. Like I said, low volume, not a lot of big directional action. What's that tell you as a technician?
Well, we've had a big move in a very short period of time, Oliver. So, it's natural to see things slow a bit. Near term, we have gotten close to overbought levels on daily charts. Really, weekly and monthly are not all that overbought as of now. But we are up to pretty important levels. There's a lot of projections I have that are right near 30.20 to 30.70 as being very important resistance for the S&P. A few sectors have had very big moves, and now they're stalling out a bit. Technology, particularly large cap tech being one, and I think that's important. So, a minor consolidation, but I don't really see things in place just yet to cause, a large market decline. It's a little early time-wise. I think as we head into August and September, a few more things will come into play. But particular sentiment is very important in that regard. And for me, it's still a bit subdued, to think that markets can tumble, too quickly just yet in the month of July.
Now, Mark, when you talk big cap tech, tell me what looks more compelling to you. Is it the chip makers, the semis, more capital intensive stuff, or will it be the more service oriented growth names? I mean, Netflix just got demolished on their own earnings. How does that affect sort of the Fang suite of companies?
Yeah, semis still look pretty attractive to me in the near term, and by near term I mean really over the next 4 to 6 weeks. I think the semi group can do fine. Enterprise software had gotten very stretched. A lot of the Fang group, Facebook and Amazon have done fine, and of course Netflix with its recent announcement and the plunge today obviously has affected some of that group. It's important to be very selective in technology these days. We have had a very good run, and so. It's not going to be a group that you can just, throw darts at a board and expect to really make money over the next few months. It's going to be increasingly, trying to find these stocks that are either bottoming and showing strength off the lows or ones that are starting to move into new high territory. But some of the ones that are very overbought are simply not going to be able to allow you the kind of returns I think that we've seen in months past.
We're looking at the chart for XLK that obviously has been inching up towards its own new high, not quite as overbought as it was going into that May downdraft. When you look at this group, Mark, does it still have more upside, or is your point maybe the upside cap to where you get more stock specific?
Yeah, I pulled up a chart, a few weeks ago and took a look at XLK, and we had gotten up to levels that were pretty important to me in the short run. But, I would argue that the peak is not necessarily in just yet for technology, but it's really going to be just a handful of stocks that might, make that move. And Apple, for one, is pretty attractive within technology. It hasn't really broken out like some of the others like we saw in Amazon and Facebook. So that would be one that I would certainly look to. And really a lot of the chip makers still look attractive to me. But when the SOX gets up to levels near 1550 to 1570 over the next month, that's really an area to consider taking some profits and thinking we could slow down. For now, tech still can work, but it's really some of these other sectors that are a little bit more interesting to me. Healthcare has really been abysmal of late in a really a season that normally shows very good strength for the group. June and July are typically very good for healthcare. Of course, a lot of the Democratic debates ongoing and the regulatory reform and it's tough no matter where you look at it. With technology, you're seeing the antitrust, what's happening in Washington, and healthcare is being dragged through the mud for different reasons, and we're yet to really have any sort of answer with regards to the trade war and what can happen there. So there's a lot of things to concern investors. Part of that does drive my sentiment debate on why there's likely a bit more upside in the market and why it's so premature to think that any sort of sell-off really extends all that dramatically.
One area that hasn't, at least so far, I don't think, been impacted by the government stuff has been the transports, but yet many are concerned by the performance, Mark. We've got a mixed bag from the early reports of truckers and rails and such. How does the group look to you?
Well, you really have to differentiate between different parts of transportation.
Okay.
I think some of the air freights have been quite weak of late, the FedExes and the UPS. Airlines, to me, are one of the more promising areas of transportation. They actually, you take a look at charts of, say, the XAL, and they have shown very good breakouts of late. 3 of the top 10 performers in the last month out of transports were all airline stocks. So yes, a lot of the fundamental news came in very negative on CSX yesterday, and much of the group got clobbered. But it's really important to put that into perspective because it barely erased even a half of what had been achieved the prior week. So transports are still in good shape to me, showing some evidence of trying to play catch up, and that's still an area that I'd really want to stick with, I think, over the next month.
I was looking at the chart that you put out on Twitter about this rallying to just under a 9-month trend line. Resistance that basically connects last year's September highs, because the group hasn't made a high since that September report. But I thought your take was interesting because many are looking at this and trying to extrapolate negatively. But your point is basically give them credit for the strength that they've had pushing up to close to that area.
Yeah, I mean, there's a big difference between intermediate term and short term. And
Okay.
so short term, many people turned negative just in the last couple of days on the information that CSX gave. And, my point was the near term trend still very much intact. Intermediate term, it is a concern, I think, to see transports lag substantially. And that's going to be something that, we're going to look at, I think, in the months ahead and say that was a key warning sign that the stocks could potentially start to peak out in the fall months, because transports are, as you say, they're still trending lower overall. They're still very much under all-time highs, and that is a problem, I think, that the group cannot play catch up. And we've seen pretty pronounced weakness in small caps all along, and mid caps. When you look at the percentage of stocks above their 200-day moving average, I mean, it's roughly a coin flip. It's only a 50-50, which might seem shocking to people that look at, stocks at new all-time highs. And, it really has been, particularly of late, just a lot of the large cap growth names that have made this move. It hasn't really been anything with regards to value, and really anything on the small and mid cap arena has been really thrown by the wayside.
Mark, one thing here before we let you go, shifting out of stocks for a second, I'm just looking at your latest note and long TBT. So a bond play here that is going to be essentially a bet on yields continuing to climb a little bit?
I do think between now and August, September, yields can make further progress on the upside. Yeah, I mean, I look at charts of really treasury yields that had gotten way